Hello, everybody. A week marked by a renaissance in the risk-on mood. Some of the dark clouds that have been in the horizon seem to have somehow dissipated. This is especially in relation to the trade tensions between the US and China, encouraging words from President Trump, saying that a deal is likely and also offering an extension in the current truce period, an extension of 60 days, 2 months. So this is good news for the markets. Also, it looks like a new government shutdown in the US has been averted. So this is also very good news because this time such an event was more likely to impact the markets negatively than what happened in the previous one, which was already bad enough, as we all know. So risk-on sentiment, markets on a high, equities all round rising, Asia, Europe even, the US, of course. Interestingly, in the US, the moving average, the 200-day moving average in the S&P 500 has been broken. So this is quite interesting and one to watch. Are we entering another period of heavily bullish market? We'll see. Elsewhere, we have, of course, the ongoing Brexit saga. No significant developments as yet, other than Prime Minister Theresa May asking the British Parliament for more time to negotiate, as if she hadn't had enough after more than 2 years. Anyway, we're 6 weeks away from the deadline of the 29th of March, when Article 50 is supposed to be triggered, and still there's no clarity on what's going to happen. As a result, the pound hasn't really moved significantly. It still sits above 128, pretty much within the range where it has been for the last 2 years or so. And even all the other events that normally would move a currency, would have an impact in the performance of a currency, seem to not affect the pound. So we've had speeches and words, announcements, speeches by Mark Carney, the governor of the Bank of England. We've had words from him as well at events. We've had some figures that came out. The purchasing managers index came up earlier this week. It wasn't particularly brilliant. Also today we've had the RICS, so the housing prices, that came up minus 20% year on year, even below the consensus. So this is also not good news. However, the pound didn't seem to move much. Why? Because everybody's just looking at what happens on a political sphere and waiting for clarity on Brexit. Everything else is just noise around it, apparently. Elsewhere, also interesting times in Europe. Figures came out in Germany. Germany just about managed to avoid entering a technical recession, but that's not good enough, and the euro is suffering and is been progressively losing terrain against other major currencies. The situation in Europe is complicated, to say the least. There's European elections coming up in May. There is a big populist anti-EU and anti-Euro movement that seems to be gathering pace. There's bickering between member states, between France and Italy, with Italy supporting the Yellow Vest movement in France, France recalling their ambassador in Rome. So not helpful at all, and not helpful for the euro. I spoke about Germany, but also France and Italy not doing so well, and recent figures point in that direction too. Elsewhere, if we look at oil, of course, as I said at the beginning of this chat, oil is benefiting from the risk-on sentiment. So oil on the up, crude oil getting closer to that $50 per barrel mark. Gold, of course, with the risk on, gold being a safe haven asset per excellence, not doing so well in the last few days, losing some terrain. And the Japanese yen, also a bit of a victim of very, very anemic figures coming out from Japan, and of course the change in mood. So the Japanese yen, also seen as a safe haven asset, is now retreating in the face of a more bullish risk-on market.